Yo, what's good, everyone? So I just want to go over this EU trade that I had sent out on Monday. This was a signal that I had sent out. I probably posted on my Instagram as well, but it was majority of signal. Everyone VP chat, they got this as well. So it's a good trade, beautiful trade. I'm actually still in it right now. I'll show you the positions and everything like that. I only got into one major position that I'm holding as of right now, and this is the entry that I'm be going over now. This was a very easy trade. This popped off on Monday, New York session. I'm getting more in tune with waking up from New York session 'cause I'm not a morning person at all. I normally stay up for London session, but I'm on Eastern time zone. So staying up that late, I'd be fucking dead. Eyes be bleeding and shit for waiting at 3 a.m. Then you might not even have a move. So you up to damn near like 4:50 and you're like, damn, the goddamn sun about to come up. So I'm trying to switch over my schedule or have switched over my schedule to New York right now. And it's been very clean. And so this was a great way to start the week off, especially because I went to sleep early on Sunday. So Monday, woke up for this shit right here, and it played out good. But yeah, this was a beautiful trade. So I'm gonna go over this, and I'm gonna get too in depth on my confirmation that I was looking for. So I actually had other confirmations that gave me this trade, but since this is gonna be on YouTube, we can go over like the simple basic shit that everyone should be learning about or at least perfecting at this point in your own trading stage. But yeah, before we get this started, make sure you go ahead and spark up a blunt, do something, you feel me? Because I'm sparking mine up right now. We definitely can't be on this bit sober, you feel me? Like we all traders at the end of the day. And so we got to get geeked up. And I don't drink, so it's gas only over here. And that's how we going. I trust and believe. I took this trade with a blunt in my mouth. Okay. That's rule number one right there. Like you gotta be geeked up so you can just be chill on the charts. And if you haven't smoked while trading or smoked while back testing, you know what you're missing out on. I definitely go ahead and recommend that shit. But yeah, back to this EU. So I saw like throughout Instagram and shit, everyone had caught this fucking trade. So this was I don't even like you might have even caught this fucking trade. So hopefully this can give some insight on just things to look for when it comes to extra confirmations or whatever. So if anything, make sure y'all watch the how I look at liquidity video first thing because that'll just definitely summarize or help summarize what I'm about to go over right now. So that's kind of how I'm gonna break this trade down just for those who did watch that video. You can have like a live example to be fucking with or go back test personally and stuff like that. So first thing first, this is on Monday. This is not an Asian high and Asian low. It's definitely an Asian low, but I don't believe it's an Asian high. The way I have my indicator set up is for different times or whatever. So just keep that in mind. If you do have like a Asian session indicator on there and it's not aligning with this, that's why I have it specifically for a certain thing. So this right here is the new day, which starts Monday. So we have that high and this low. So again, I wasn't up for London session. I was only be up for New York session, and that's where I was gonna get my overall entry. So this line right here is the daily opening line. And as we all know, and if you don't know, you about to. When we have market opening up in a bullish day, we basically have market doing this. Okay, so this is overall addressing that. Again, Asian session, it also leads into the next day. Okay, so you can go back test that for different days of the week. You'll see how Asian session is kind of like how the day ends. It moves into a consolidation beginning the next day. This is how Monday had began with the consolidation that was led up from Tuesday, right? So you can go make sense of that. So with this daily line right here, you can kind of look at it like this. We have Asian session, boom, it's consolidation. London session or New York normally come down here, clear out these lows, and then we'll target these highs, right? And then what it'll do is it'll go back in consolidation because 5 p.m. closure over here, spread goes crazy, market closes, and then boom, we play around for Asian session. If you have another bullish day, it's gonna go down, push up, come back down, and have another Asian session. If you have a bearish day, it can push up, come down. Let me scoot this over a little bit. We can come over here, have it like this for a bearish day to then come into Asian session, back consolidate. Another bearish day, clear those highs, run these lows, another Asian consolidation. Okay. So that's kind of how like the daily time frame cycle works. When it comes to like bearish and bullish days, this is all it's really initially doing. And it's doing this because I don't want to make this like a daily opening type of video, but we can go ahead and break this down real quick. And the reason it's doing it is because of this. We're going to have a candlestick. We got a wick there and we got a wick here. Okay. So in between this could be a bullish candlestick, for example. Between this bullish candlestick, what this is doing is having Asian session come over here, London or New York, making that impulse for the day, right? And then, oh, my fault. After it makes that impulse for the day, clears out all that liquidity, and then it comes back up, right? And then this right here is what creates that wick, because now we come back down and lead into the next day. So this initially right here is wick, and this is wick. Okay, so that's exactly why this daily candlestick looks like this. And it's the same thing for a bearish day. It's just vice versa. But if we put it in here like that, this is all a bullish candlestick is initially doing. And just so we can see a bearish example, this same exact thing, just not look at it as being bearish. So the bearish example will have Asian session right here, clear out that liquidity, come back down, and begin the next Asian session, right? So again, this impulse initially makes that wick, and this impulse initially makes that wick. So this is what a bearish and bullish day will look like. And again, bullish will clear out this liquidity and run up. So the daily opening line is right here in between where the Asian session starts, okay? And again, that's because we're buying below at the daily opening line only so that we can make this wick, right? It's initially going to be wick at the end of the day, because if this is wick, that means we're going to be pushing up throughout the day, right? So that's one thing that I keep in mind. If I'm bullish and I'm trading New York or whatever, and we're still below this daily opening line, I'm looking for buys, because that means that if I get into this entry right here for New York, for example, that means I have all day for my profit to be there, you know, for my TP level and then shit like that. That's kind of how I go about it. I'm gonna get into my entry here and see that I have room for profit, see that I have room for market to go in my direction. And then 5 p.m. or 4 o'clock type shit, market starts coming back down, you know, 5 p.m. closure, and then boom, we lead into the next day. And so now we're going to see, we're going to be again bullish or bearish the next day type shit. So those are things that I definitely peep. And it's a quick lesson on that. I'm gonna have a whole video going over this specific thing, because it gets into our reversal days as well. Like if Monday is bullish, Tuesday can be bullish, but leads into Wednesday being bearish. And now we have our reversal days that clear out all that. So I'm gonna get into that and later on videos. But this right here, just want to let you know why I was looking at it to be bullish. And how I look at bullish days in general. So this is what I was looking at right here. So with the Asian session, boom, so far we have this. And everyone should know at least by this point how Asian session liquidity gets cleared out. And the only reason it gets, like, I'm not gonna say the only reason it gets cleared out, but the easiest way to just look at it is if when there's consolidation on both sides of the market, we have liquidity here, we have liquidity here. If we come up here and grab this first, what does that mean about this? That means this was created liquidity. And again, go watch the how I look at liquidity video, because I went over this exact example. So that's why this is a good video going over it live. So if we leave this liquidity here, that means we're going to initially grab that shit. So same thing over here. If we have liquidity resting here and liquidity resting here, if we grab this, okay, so what the fuck does that mean about this? That means that that's created for future movement, right? So that's exactly, and this is again what Asian session does. And as you just saw the breakdown, Asian session will do that just because it's leading into the next day. So if the next day is bullish, I mean bearish, what it wants to do is clear out as much liquidity to the upside as possible. My fault. I don't know why it disappeared. We want to clear out as much liquidity as possible to the upside, right? Because we have liquidity built up here, liquidity built up here. Boom, we clear this out. Now we're targeting these lows over here, right? And again, this will give you that bearish day. So that's why the Asian session is important, because it leads into the next day. So if it leads into the next day and we have consolidation on both sides of Asian market, and we see that these are our lows and these are our highs, okay, if we just cleared out these lows, what do you think we're going to be targeting next? Okay, we're going to be targeting those highs. So that's why that's important. No, I did not want to exit that. That's why it's very important for the lows and everything to be taken into consideration when you are pulling up into New York session and shit like that, because you can kind of go ahead and get the gist of what Asian session did already. So that's why I like trading London session, because I will initially just be waiting for London to clear out and then New York push up, and then for the New York buy or whatever, the rebuy will be something within here type shit based off what London did. Bearish wise, now I know that we left this liquidity to the upside to be grabbed up. So that's why I was looking at it like that. So due to us being bullish as of right now, my daily opening line is here. I have my Asian consolidation, and right now we've cleared out that low. So if I want to, initially, if I'm wanting a bullish day, this is what I have so far. right? So if I need a bullish day, that means I've grabbed this liquidity and done what? Left this liquidity over here. So immediately I already know this is created liquidity for me to come up here and get grabbed. Easy as that, right? And so if I'm on a bullish day, all I need at this point is for market to push up. And then it can do whatever the fuck it wants to do at fucking 5 p.m. or whatever the fuck time, 4 o'clock type shit, because this is all of my profit, right? So that means I need an entry down here to get all this profit for the day. So that's exactly what I'm looking at over here. So again, if y'all watch the how I create a liquidity video, it gets into, for one entry, I look into, or I believe this video is inside the Telegram, and how I look at slow down momentum. So one thing that I peep, and again, this is not a London session trade. So due to this not being London session trade, that means that New York had our entry, and New York is what cleared out all the liquidity for the day, right? So we have market over here. The main thing that I have, it's just rule type shit. If I can draw, my fault. Let me change this so we can have the arrow. If I can draw an arrow curve and it looks like this, like it's very curvy, it's very clean, and it's not jagged as fuck, it's not straight or anything like that, then I know that I'm getting into a good entry. And again, this video I believe is inside the Telegram, but I'll remake it or whatever. It's very simple. It's just a rule of thumb that I have, that if I'm able to simply draw this arrow, then I know that I'm in good structure for market shifting my way. Okay, so that's one thing that I peep. And the reason this arrow is important in general is just because we're able to clearly see which liquidity has been cleared out already. So all this has been cleared out, and this is all that's been left so far. And then immediately after we've cleared out liquidity, we began to break structure. And that's very important because the bottom of the range leads to the top of the range. And the bottom of the range happens immediately after all the liquidity has been cleared out. So that's what you want to peep as well. So initially, with all I was looking at with this is that I see that we have cool slowdown momentum. We've already cleared out Asian session lows. We haven't cleared out the Asian highs, and we have a fucking quadruple top sitting here. We got sideways liquidity sitting here. So my overall target was just this high, just because all of this is resting right below this. Okay, so I was like, all right, fuck it, this right here is gonna be my highest high that I'm looking for entry at, just because we have all this built up liquidity. And again, if you understand the process of grabbing and creating, we see that we've grabbed up all of this liquidity here, grabbed up all of this, grabbed up all of this, boom. So what do we leave behind? We left all of this liquidity behind for what? For all of my profit to be taken, right? And again, this is why this is a clean example of that past video, just so you can simply understand the process of grabbing and creating. It's very simple. Again, due to us grabbing up all of this liquidity to the downside, what does that mean? It means it no longer exists. And that means that all of this is all that's left there. So that's why that's very important. So check off how we have slowdown momentum. We see that we've cleared out Asian session lows and we've left highs. And the way I look at it is market can move around depending on the pair. You know what I'm saying? For Euro USD, I don't see that shit going to like 35 pips or whatever, but below the Asian session low or above the Asian session high, for this example, it's below the low, we can have like a 35 pip fucking parameter basically of what we'll be looking at of market of shit itself basically. So we'll have 35 pips for market to be able to come down and then do its thing. But this right here is a total of like 35 pips. And so I look at it as if that shit goes more than 35 pips, and again, this is for the pair. So especially if Euro USD does some shit like this, I'm kind of going to step away from it. Because you have a pair like fucking GN or something like that, it can move fucking 40 pips and 2 candlesticks type shit, you know? So with this being the 35 pip limit, I basically just have market come down here. And that's like, if it reaches past the 35, I'm not going to get into the trade. I'm kind of just going to look at it like, yeah, this has moved down a little bit too much away from the Asian session high. And of course, that shit can go 38 pips and completely reverse. And I could be wrong, but I'll rather just not be wrong or right. I'll rather not be right in with those predicaments. I'd rather follow my plan and everything like that. So this only fell down fucking 10 pips. So that's great. That's letting us know that market isn't falling down too much. And again, it's within that 35 pips that I was talking about. So boom, we had that checked off. We're looking for a bullish day. So that's why all this trade was very simple. And I had a schematic play out within here. But the easiest thing that you can understand right now is that this right here is the top of the range. Okay. And this right here is the bottom of the range. And our range always happens after we break structure and after we clear liquidity and then break structure. Because again, the bottom of the range leads to the top. But what starts the bottom of the range? This right here, the liquidity that's been cleared out. So we already have liquidity that's been cleared out. Boom, we've run that. And then we immediately have reaction. Okay. And that's another rule of thumb for me, is that as soon as we clear out liquidity, because you got to think about it, when market was right here basically, and it was shitting itself, nobody was looking for buys right here, you know, like retail wise. Everyone was like, oh my God, market shitting, it's breaking structure to the lows. I'm about to keep selling, right? So the thing about it is, after I clear out liquidity, I immediately want to impulse in the opposite direction. And I want that impulse just to signify that buyers are actually in control. Okay, that's very important, because if you don't have a clear reaction like that, then most of the time it can fucking play around and drop one more time. And if my stop loss is here, then why would I, like, you know what I'm saying, that shit get stopped out? I don't want that shit. I want market to clear liquidity and then immediately have a reaction right after that. And again, it's just so that I know who's stronger and who's proving themselves. So we have our bottom of our range and our top of our range, and then we have this bullish breaker structure right here. Right. So we have all of these things that are very, very basic, I feel like, and very easy to identify. So due to us, and then again, London session already happened. London session was this blue candlestick. So London session pushed up and then kind of pushed down. So I really don't give a fuck about it. The thing about it is that we have a fucking quadruple top sitting right here. Like, come on now. And the thing about the top of our range, again, if you watch past video, top of our range is very important because it needs to signify that this, like, is going to get cleared out. And so with our top of the range applying with over here, with all this liquidity right here, like, come on, that's too fucking easy to know that that liquidity needs to be grabbed up. Simple as that. So again, we've cleared out all this liquidity with slow momentum, which is like, I like that. And I like how we've been moving sideways and now immediately push up. You know what I'm saying? It's on the 5-minute time frame, and it took some time for it to move sideways down and then immediately pushed up within like an hour, 30 minutes type shit. You feel me? Like, that's very important right there. So all I look for now is, when I'm getting into my actual entry, is I want to see that impulse to the downside. Because again, that impulse to the downside that left this wick right here, for example, this was initially a fat ass bearish candlestick that hit these sell stops that had everyone thinking, hell yeah, I'm gonna keep buying. So when it did it again right here, you know, they're gonna keep shitting themselves. They're gonna keep selling. So the same thing, that's what I want to see over here. Now that we're bullish, and I see that we're bullish because again, we sold here and then bought here. So who's stronger? Clearly buyers are stronger. They just proved themselves to be stronger. So with that being said, I want to see that last impulse to the downside to let me know that they're fucking everybody up mentally. Because again, this is all a mental game at the end of the day. So if you're fucked up mentally on the charts, you just not going to be a good trader. So yeah, nothing happens. All right, boom, the impulse happens. And then I believe I get into entry probably like either right here or within this candlestick right here. And yeah, I got in on this candlestick right here. I sent the signal out at 7:59, and this purple is 8 o'clock, 8 a.m. New York session. So that's how I have my candlesticks. But yeah, so after I got into my entry, stop loss sitting at this low, it's a 5 pip stop loss, but I put it at 6 pips just in case. I put it at 16.99 or 16.90. Yeah, 16.99. So it's right here, like 6 pips, just in case market wanted to come down and push right here. If spread wanted to tap me out or whatever, I really just want to give it one more pip. And it's because it's like, fuck it, why not? It's 6 pips. I don't give a fuck. So I look for my TP. My TP is up here. And again, TP is up here because we have all this liquidity sitting right here. And again, if you watch that video, this is too fucking easy to identify that it needs to be grabbed up. Like, it's legit too fucking easy. So this right here was going to give off of complete 1 to 7 risk reward. And that's pretty straight. Like 1 to 3, 1 to 5 is like minimum type shit. So 1 to 7 is pretty cool. And it's only 43 pip TP. So it's nothing major. And again, this is the day, like, I'm looking at this for being a daily trade. So if I'm getting into my entry and I already have my daily opening line, meaning that I'm making my wick right now, that means I need an immediate push up to come back down like this type shit. I need all of this to be bullish for the whole entire day, because now I've created my wick. So I immediately need that impulse to let me know, hey, your TP will get smacked because you're in bullish days type shit of the week so far. So yeah, that's why I got into this trade. And again, every market had led into what happened on Friday. And Friday was shitting itself, hard as fuck. Monday shitting itself. So I mean, not Monday shitting itself, but leading into Monday was shitting itself still. And again, we started to slow down over here. If we're shitting itself so hard, why would it slow down like this immediately afterwards? You know, that's just something you got to peep structure wise. So now that we've slowed down, we've broken structure, we identify our top and bottom of the range, and we have our entry, 6 pip stop loss. TP1 is always easily going to be the top of your range. Okay. You always want to TP at the top of your range. If you're within the range, TP at the top of your range, number one, because market can easily fuck around and come up here, tag that, and then boom, just shit itself one more time. You can shit itself one more time, and then all of a sudden push up. It can do that. Okay. So that's why you easily want to TP at the top of your range. Because if you're already within the range and you're targeting up here, this is nothing. This is completely nothing compared to this over here. Okay. So why not go ahead and take that shit? Let market do its thing afterwards. Okay. After you break the top of your range, that range is complete. You shouldn't want to come back down there. Now you can risk free your shit. You can break even. You can take majority of your profits, whatever you want, but regardless of the situation, you always must TP1 at the top of that range or bottom of your range if you're in a bearish example. But overall, I was looking at TP up there again because all that liquidity resting. So yeah, once I got into this trade, it was like I said, I want to have an immediate reaction. And after this would have been re-entry if you wanted to get into it. I had 3 entries actually. I had them right here, then I had them over here. But this entry right here was the same as that process of how we cleared out liquidity right there. We broke this structure. We cleared out liquidity with the impulse. And then we broke that structure and then came back down, meaning that this was the top of our range. So this right here, boom, that would have been a TP if you want to quick scalp that shit. But either way, that was the next entry within there. I had 3 entries, but I'm only holding 1 right now, which is this entry right here. And it had no drawdown. Like as soon as I sent the trade out, because I sent it out right before New York session because I was on this candlestick right here, and then New York opened up and immediately started booming up. So I initially only had fucking 1.7 pip of drawdown. So very easy trade. Everyone who got into this trade signal wise, very easy, very smooth. And yeah, that would have been your re-entry right here if you did want to stack that. But if not, we're completely fine with our entry as of right now. And I mean, clearly we've already hit TP1, so now we're pretty good. So yeah, after that, I believe I just put my shit break even, or if not, just put the stop loss right here. So now I'm working with a 2 pip stop loss. If you were to re-enter, you would have had a fucking 1 to 22. So it would have been a great trade at that new level. But yeah, after that, market was just booming, doing this thing. Again, we created all this liquidity over here, and we should easily be able to identify that. So whenever market started to shit, again, this made this okay. Since this day is complete, now that we this right here is the daily split line. So this is initially what happened. We had our daily opening line, boom, market came down, came up. Now we're back down over here. Again, it comes up and then it shoots back down for that agent session consolidation. So what agent session should do should be something like this, but I really don't care what it does because I'm not gonna I don't need to trade that again. I don't need to get into a whole nother day of confirmation. I'm gonna go ahead and continue holding my trade right here. So I'm almost at TP. So I took another partials right here because we tested, but now we're sitting up here with a fucking double top. Easily a double top. So this is easily going to get ran through. When market started shitting itself, it's only because every goofy who's looking at this as a double top retail wise is selling. You know, they're stacking inches up here. Niggas got into this perfect sell right here, and they're like, hell yeah, I'm right as fuck. I told y'all it was bearish. I told y'all it's a double top. And they could be fucking TPing down here. It doesn't really matter. But either way, it's the fact that they're in a sell and market is allowing them to be correct. Okay. That's one dangerous thing about market. When it allows you to be correct, you completely get lost in the sauce. And now you're only looking at this shit like, yep, I'm only going to trade this now because I just hit TP. They could have just been looking for a 1 to 2 and hit TP. And now every time they see a double top, what are they going to do? They're going to sell. Okay. And not every double top is going to give you that kind of reaction. It's not going to let you hit a 1 or 2 next time. It's going to let you hit a stop loss. You feel me? And they might widen it because now they're like, oh shit, I'm going to hit it like last time. So again, that's the hamster wheel of thinking when it comes to these double tops and resistance and all that extra shit. It's just pointless. It's just to fuck everybody up. So yeah, now we're in our next day. Let market do its thing. I'm really, again, just wanted to come over here to hit TP. Yeah, do what you want to do. Is that just live market now? I'm about to say, I don't believe that's live market now. Okay, bet. So yeah, now we're right here. TP has been hit. And again, like I had said with that agent session, all it did right here, it cleared out. Again, this is agent, not the agent session low, because I don't have mine labeled like that, but it's agent session low. That got cleared out, and then we targeted these highs. So that goes nothing. This again, this is picture perfect a market of a day, 2 daily candlesticks going like this. Okay, that's exactly what market's done so far. So now we're around here. I don't really care. It's fucking 2:30 right now. I don't really like getting into trades this late because I'll only initially be in them for a couple of hours. Because market's about to close and spread goes fucking dumb over here. But yeah, that was a trade. Very easy trade. Very easy trade to understand. I feel like. And again, this is double top turned into a triple top. They sold, and get stopped out. So all that shit is weak as fuck. Don't worry about that. The main thing to focus on is how we slowed down. We had a nice impulse. We pushed up, broke structure with nice momentum, came back down. This is my entry right here. And then we continue pushing up higher and higher. And again, if you watch those past videos, you understand that all this liquidity right here is just meant to be grabbed up. It's way too easy. And that's why I got smacked. And TP initially just got hit. So yeah, I closed. Now I'm damn near holding nothing of the position. I'm just holding entry right now because I'm just letting it do its thing. Because this is a beautiful trade. Hit a 1 of what was it? No, this wasn't a 1 to 22 at first. It was a 1 to 8, 1 to 7. But yeah, beautiful trade. So yeah, if y'all have any questions or whatever, definitely let me know. You can just hit me up on Instagram or on Telegram type shit. Everything will be linked in the bio. But yeah, run the likes up, run the comments up. Let me know whatever video y'all want next type shit. But yeah, very simple trade. Euro USD, goddamn. If you want to go back test it, this happened yesterday. And yeah, everyone caught this fucking trade, I felt like. And if you didn't, now you know how to go back test this shit, go back test the daily structure and see how that goes. But yeah, any questions, comments, concerns, hit the nigga up and I got you. But let's run this shit out easily. Everyone should be grinding this trading shit out.